Hi there, my name is Kevin Carlson. I'm a mortgage broker here in Canada. Thank you so much for joining me on my YouTube channel to learn a little bit more about mortgage financing. Today we're going to find out what is in a mortgage application. So when you're looking to apply for a mortgage, I guess it kind of stands to reason that you would need to take a mortgage application. So a mortgage application is kind of similar to when you go to your doctor and you've got a chart. So it's got a little bit of your history, maybe any allergies you might have, that sort of thing. So in the mortgage world, we have something similar. It's called a mortgage application. Now, keep in mind, a mortgage is not just a product off of a shelf. So it's not something you can just buy off of Amazon. It's not something that anybody can buy. It is a custom tailored service product. So it is custom tailored to you, and it is highly dependent on your credit history, on your income, down payment, a whole bunch of other different factors. So today we'll go over what's in a mortgage application, what sort of information that we collect when we do mortgage applications, and just to give you a bit of a heads up, if you've never applied for a mortgage before, what to expect. So let's go have a look at the mortgage application in my system here in something called Filogix. It's kind of the widely used, encrypted, highly secure web portal that we use in the mortgage industry to take mortgage applications, pull credit reports, and send your application off to one of our lenders for an approval. So this is our Filogix system for this fictitious couple, John and Jane Beyer. Initial parts of the application, we've got a couple here. So we've got their first and last names and middle initials. Date of birth for each of them as well. Social insurance number, I didn't put any number in here because they're fictitious, of course, and they're married, so married to each other. And then I've got basic telephone numbers. So I've got work telephone numbers and cell numbers, and then email address for each of them. Now, as it turns out, they still have a home phone, so I've got their home phone number listed right here, and they do have a child. So they got one dependent at home, and that's kind of the basics of the first part of the application. Now, when we're doing the application, when it comes to addresses and that sort of thing, we need to go back 3 years of history for your residential history, so where you've lived. So we'll go over this here with John and Jane. So here we are. They live with their parents back in Love, Saskatchewan here. Actually, we're on Main Street, 458 Main Street here for John, and then Jane, she was at 456 Main Street in Love, Saskatchewan. So they were just a couple doors away from each other and live with their parents. So they no longer do that, and so they've actually moved off to Saskatoon. So they're living in Saskatoon and paying rent. So we've got basically more than got a 12-year history of their residential status here. Sometimes when we get applications from people who move around a lot, so if you're a year here, a year there, this ends up being a little bit arduous. So make sure you've got a full 3-year history of where you've lived, and if you've moved home or something like that, we do need to have all that pertinent information. So let's go through this here. We've got their work history. So for John, let's start where he started here. So he's actually a geologist, went to university, became a geologist, and he started with, this isn't a fictitious company, it's a company called Nutrien. They're a potash company, and so being a geologist, he took a position with them as a professional and in a salary position. So if you look here, it's got an address here, the city of Saskatoon, and then a fictitious phone number. So a geologist there for 3 years. So when it comes to employment history, we need to go back 3 years for that as well. So he's there with Nutrien for 3 years, and he has 4 years worth of experience. So this is probably his first job right out of university as a geologist. And so he made $85,000 there. So that's where he worked previously. And then we skip back up here to his current position. He's actually with a different potash company as a geologist, Potash Corporation of Saskatchewan. A little bit of a bump in salary, you can see, and he's been there for 1 year. So we've got more than 3 years worth of employment history for John, and so everything's good there. So what we need to have is the proper address and name for the business in the application, as well as a job description. So if he's a geologist expert 1, 2, 3 or whatever, we have to make sure we put that in there because when we go to get any documentation, it might note in there his exact position. It might not even be called a geologist. So we have to be careful to make sure that this application is going to fit with the documentation that I'm going to be collecting from them down the road. Now let's go back to Jane's application here. So let's skip down to where she was previously. So she was at the University of Saskatchewan, big university here in the province in Saskatoon, and she was a nursing student for the last 4 years. So she's been working away here, and so that's kind of where she was. So I've just got plugged in here for just being a nursing student and no income, right? So she definitely was busy doing that for the last 4 years. Now we skip up to what she's doing now. So she's taken a position with the Saskatchewan Health Authority as a registered nurse, professional, and she's hourly. So she's not a salary position. Many nurses that we work with here, they end up being just hourly to start with. It's not really salary positions. So she works at Royal University Hospital, which is a real hospital, and I've got a phone number plugged in here too. So for Jane, I've also got a 3-year history. So once again, just like the addresses, if you move around quite a bit when it comes to where you've lived and where you've worked, we need to have a full history of where you've worked. So if you've been at the same job for the last 3 or 4 or 5 years, no problem, just one employer. But if you've moved around for a few different places, like say you're in the trades, construction trades, it's very common for people to move around a little bit. Just make sure you have a 3-year history of where you've worked, what your position was, address to the company, and that sort of thing. And so what we've got is the address history, so 3-year address history, and at least a 3-year history when it comes to where they worked as well. Now, I've actually got a little bit of an extra income for these folks here. So they have a child, and he's quite young. It sounds like maybe Jane probably took a little bit of time off to have that child while she was in university, but now they've got a young child at home, and they get a child tax benefit income monthly of about $150 per month. Now, most of the main banks that we work with, Scotia, TD, all the big 5 banks, they typically don't use that income, but some of our lenders in the broker space do. So I do collect that information. If we do need to use it, it is something that we can add in, but not all lenders will do it. So, but if they're purchasing a home that brings your debt ratios up a little bit higher than where it needs to be, then we can add that income in here and use at least a portion or even all of it if we need to. So what we've got here, so we've got the total income, $178,012 for the 2 of them, and we can add a little bit more here for the child tax benefit, $150 a month if we need to as well. Now we'll go through the assets. So the assets, I like to be as clear as possible when it comes to those. I've got kind of a whole list here. So they've got some TFSA, a tax-free savings account with Scotiabank, $18,500 as savings. They've also got Investors Group, IG Wealth Management. They both got some investments with them, some RSPs, about $34,000 for Jane, and then John's got another $47,230 with IG Wealth. Then John actually also has does some Questrade investing on his own. So he's got about $7,600 of MAD investing money in a different account here just under his own name that he's managing himself. So as far as vehicles go, they've got a 2002 Honda Civic worth about $3,500, and they've got a camper, and so that means they probably have a truck. So if you're going to have a big camper, then you need to have a big truck. So they've got a 2017 Ford F-350 truck worth about $42,000, and then the camper that goes with it, another $23,000 for the camper. And then John's father was into motorcycles and has gifted him a vintage 1970 Honda CB750 motorcycle, which is depending on what it is, $18,000 might be a bit too low. So if it's full cherry, that's what it is. So if you've got some assets that don't fit with investments or vehicles, keep those in mind, especially people who are in the trades. So if you are a journeyman mechanic or something like that, it's often surprising when I say how much do you have in tools to a client, and they'll say, oh, I don't know. When they start to really think about it, some mechanics have upwards of $15,000 and $25,000 worth of tools. So I do add that in here because that makes up a part of your net worth. So any assets that we can use to help offset any debts, has to be factored in. So if you spent $20,000 on an RSP, then that looks really good. But if you've got a debt that goes up against it, that kind of cancels each other out. Whereas if you spent $20,000 on tools and you've maybe got a little bit of a balance on a line of credit that you're still paying on that, it's good to have that offset of the balance, right? To show where you've got the asset, which is the tools, and then maybe a little bit of debt owing, or you spent some tax paid money, your income, to purchase tools. So I like to put them in there as far as assets. Other things to put in there, if there's jewelry that's worth something, arts and stuff like that, I often add those in too as well if it's a significant value. Now, so what I've done is I pulled credit reports for them, and then the credit reports bring up sort of a list of the debts that they have. So the credit reports come up from a different page once they've signed the consent forms, giving me permission to do that. The credit loan here from Ford Credit for the truck, $49,000 loan they took out. They probably had another vehicle to trade off, so it's probably worth a lot more than that. So they owe about $23,000 on that truck. Payments are about $750 a month. The camper loans can be stretched over a big long period of time, like 15 years. So they've got a small payment on the camper, about $16,000 over there. And then Jane's got some student debt. So of course, you go to university for 4 years to become a registered nurse. There might be some debt. So she's got a student loan of $24,000. Now, if it's a student line of credit, there's a little bit of a different way to calculate the debt ratios. I'll go over that in a future video as well, and I'll also link it in the description because there's a little bit of detail when it comes to how we balance the debt ratios when it comes to student debt. It's actually a little bit less. So if it's for student debt, then the payment that we have to use for that, for your debt ratio calculations, is a bit less. And then they've also got a credit card here. They told me that they pay off this credit card every month, but I just have to use 3% of the balance on this credit card when it comes to that. So, $36 when it comes to that payment there. So they don't own any properties. If they did own perhaps some farmland, so if they, their family member gave them some farmland and that sort of thing, then I'd put that in here under additional property. And then if they're getting a little bit of rental income from that, we typically don't use farm rental income, but it's something that we have to put in there because they might have property taxes to pay on that land. Or let's say if they purchased a lot property for a cottage, and so we have to use the property taxes on that cottage property as well to disclose to the lender they've got some additional debt. So that's the basics when it comes to the application on this side of things that outlines the clients themselves, their, like I said, their employment history and their residential history, their assets and their debts. That's kind of the nuts and bolts when it comes to the application. Now, what we do is we flip over to the mortgage side of things, the mortgage application side of things. They're looking to purchase a home in Saskatoon. So they've got owner-occupied to purchase is what they're looking to buy. I don't have any details here for the property, but given their income and their debts up against each other, their debt ratios here would point towards if they've got about $65,000 to put down. So they're going to use some of their RSPs, some of the savings, and then a gift from Jane's parents. They're going to give them $15,000 to just help out for the down payment a little bit. So they got $65,000 to put down. $650,000 is kind of what I came up with, which would bring them to that 10% down payment. Now, when it comes to purchasing a home for them, I obviously would have explained to them that if they were able to increase their down payment to a full 20%, they would be able to avoid the mortgage insurance premium. So, but at 10% down, that brings that mortgage insurance premium through CMHC, that sort of thing, is 3.1%, and then that's $18,000 that gets added to the mortgage. So even though they only need a mortgage of $585,000 based on a purchase price of $650,000, that gets added to the loan of $18,135, bringing the total loan to $603,135. And this is kind of based on current rates as of today, about 1.84%. This is what they can expect to pay for just the mortgage, the P&I, the principal and interest portion of the payment, not including property taxes or condo fees or anything like that. So this is the qualifying interest rate, 4.79. That's the stress test rate I've talked about multiple times. They have to qualify that interest rate. So at the qualifying interest rate, if you look up here at their TDS and GDS, these numbers here, I have to have them at the very maximum 44% for the TDS, but 40 is where we typically like to shoot for. And then the GDS, we have to be under 39, just to make sure that the numbers fit that way. And then I just have, this is a pre-approval application, so I have to make sure that I've got the taxes plugged in, estimated taxes on a house in Saskatoon. I just use, $650,000 would be $6,500 for property taxes. So when it comes to the application, what we've got here is we've got the client side of the information of the application, who they are, where they've lived the last 3 years, where they've worked for the last 3 years, their assets, so their savings and vehicles and that sort of thing, and then their debts that go along with that. That helps me do the calculations on the actual mortgage application side. So that's kind of the two big parts of the mortgage application. Just make sure that whenever you're applying for a mortgage that you have this sort of information handy. Social insurance number, make sure you have that handy. And if you're going to be transmitting a social insurance number, private information to somebody that you're working with when it comes to a mortgage, please do not use social media. be careful to not transmit your social insurance number. If ever, whenever possible, try to speak to the person you're working with. I always try to speak to them on the telephone and not to transmit those private numbers over internet or over Facebook Messenger or anything like that. So that kind of does it for the mortgage application side of things. If you have any questions about mortgages in general, please feel free to contact me through my website, which I always link down below in the description. And feel free to comment below if you have any questions as well. Okay, thank you so much, and have yourself a great day.